And Megan, even with today's bounce in the indexes, you still have the S&P down 2% on the week, almost 5% off of its highs. Has this pullback kind of changed the risk reward in your view, or given a signal as to where to go next within the market?
Yeah, I think this has been a bit of a healthy development for the market. We've been watching with a bit of trepidation that the market just keeps continuing to climb higher, and it's been a pretty significant momentum trade. I think what's been really remarkable looking underneath the surface has been the underperformance over the past 6 months or so of higher quality names. So I think what we're seeing is a little bit of a shift in sentiment. Valuations matter. We know they always do, but you're getting more attention from the market. Balance sheets matter. How the AI trade is being funded, or the AI investment rather, all of that matters. And I think this sets us up for a better next 6 months for higher quality companies.
So higher quality, certainly they were left behind, as you did have a lot of the speculative, more aggressively valued things work into the October highs. But what do you need, if anything, from the economy from here for those types of companies to work? Earnings have been good, but everyone's wondering whether this soft patch in growth is going to give way to a reacceleration next year.
Yeah, I think the Goldilocks scenario would be really good for high quality companies. I think you'd look for a stabilization in the labor market, particularly in small business, as well as some of the more cyclical sectors of the economy. So the Fed cutting to neutral, but not needing to go much lower than that. And I think continued resilience, I'll say, of the consumer overall, though we know we have a bit of a two-speed economy going on right now.
For sure. And yet with that, I mean, certainly Goldilocks seems pretty comfortable for most, but you still think the market is underpricing recession risk? And what does that mean as an investor?
Yeah, we have about a 45% probability of recession over the next 12 months, which is uncomfortably high, and I think a little bit higher than what we see from the rest of Wall Street. I think that's mainly on some of the cracks that we've seen in the labor market, but we are still in a data fog, and I think over the next few weeks, we should get a little bit more clarity on the direction of the labor market and whether we're seeing maybe the early innings of a productivity boom because companies are investing in AI in place of jobs, or if it's just a softening backdrop.